Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning. Welcome, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. We got a lot going on here. A lot to discuss. We're going to discuss the aftermath of SNL. We had a cyber attack. We got metals going to the moon this morning. So a lot to get to on today's show. Our guests, as they are every Monday, Tim Quast will join us to discuss some market structure. He is, of course, the founder of Market Structure Edge. And Matt Hammond from IPO Warriors will preview the week and recap last week's action in IPO land. That'll be at 9 o'clock. Today's show also sponsored by Market Structure Edge, by the new way to trade for free. MarketStructureEdge.com. The link is up on the screen. Check it out there. Joel, not sure what he's doing in the background there.
Making coffee or something.
No, just getting organized. Good morning.
Good morning.
Good morning, traders and investors. Welcome to another week here in the markets. Starting the day in the green here, up 3 3/4 handles, 42.29.
You don't know because we can't see your chart.
It's just running around like a chicken with my head
You
cut
sound
off.
rough. You had a rough weekend or what?
I think he might be on
his voice is hoarse.
He might be on a different mic, or maybe the Tulip Festival.
Oh, it's his voice. He's all cracked. He sounds like he's got like he was yelling all weekend. Were you yelling at your screen all weekend?
Yeah, yelling and screaming, ranting and raving about the Derby. No, it's just combo cold allergies here getting the best of me here. And, but we'll get through the hay fever season, just like we'll get through this show. 62 cents, that's how much we're up in crude. Thought it would be up more with the hack. We're up at 65.50, bouncing around pretty good. Gold making its move towards 1850. That's up $9.80 at 1841.10. Silver playing catch up. That's up 42 cents at 27.90, which is good. And Bitcoin it's had a pretty good range. It's up $390 at 58,150. Those are the futures. Triple D, it's just kind of like a manic Monday, isn't it? We got a lot of different things going on. Some stuff in the red, some stuff. I'm seeing a lot of red.
It's all over the place.
Some green.
Yeah.
What do you got? You're not
keeping random walk market here this morning. You have some stocks up, some stocks down. I got the Qs down about 0.5%. Well, they've come up a little bit from the lows of $1.25. The Qs are down. I got IWM trading down as well, which is usually you see those two and go opposite direction, not today. And then you got SPY trading higher. I'm struggling to find stocks. So I look at the IWM here trading down 0.5%, and I see oil ripping, and I see the banks are trading higher, and I see a lot of smaller stocks actually trading higher. And I'm like, why is IWM trading down $1? But, this is the market. I guess there's some stocks making up for it somewhere. But the majority of the stocks that I'm looking at on my screen, if you're not looking at, and there obviously is some Apple, and then there's some of the major techs. Google got a downgrade today. There is some red in tech land. But when you move out of tech land, it's mostly green. So I'm actually surprised the IWM's down this much.
Yeah, we did get some analyst moves in Facebook and Google. Not something you see a lot. I mean, you get a lot of coverage of Apple. You get some coverage of these other big stocks, but not
downgrades on those two stocks.
No, wow, downgrade. I mean, what do we want to cover those?
Yeah, for sure. I think so.
Let's go, Spencer. Give us. Do you have the information on those?
Yeah, it's just a downgrade this morning to neutral from Citigroup. And just to give some context, and I'll share my screen in a second here. I just wanted to look up the last time we got a downgrade in Facebook or Google.
Long time.
Facebook, the last downgrade. Actually, no. Wedbush went to neutral in mid-April on Facebook, and the last downgrade I had for Google, and here, let me bring up my screen so you can see what I'm looking at. It's been a while on Alphabet, I'll tell you that. The last downgrade I'm seeing, this is for Facebook and Google here. Last downgrade I'm seeing for Google, got to go all the way back to, oh my God, they're all at buys. It's been a while. This is January.
I'm telling you, a long time.
It's been
Look at that.
Let's go just Google. Let's just Google here. This is sort of by date. Yeah, it's been.
Analysts aren't biased at all,
there we go. 2019, is that right? For that
wow.
Murphy.
I don't see any downgrade since then. I don't remember talking a Google downgrade in a long time. Yes, I'm still long my Google. I have not sold any shares of it whatsoever. I know it's pulled back, but I still think it's growth at a reasonable price. And I don't think Google's going away. It remains one of the biggest positions in my long-term portfolio. No, I am not selling it today because it is downgraded. They've had a run though. So I guess the analyst is saying, it's been a nice run. April's 2000, it's 2,400. It's been a pretty good run. I mean, a lot of things have run. So if you're not in high growth, names, the stocks have been going up. So I don't know. I guess it's just a valuation call. Is that what it is?
It's actually a call on the tremendous growth in digital advertising and the tough comparables ahead, basically, because the past year was so good that they're saying, growth will slow.
Let's do Facebook with it because these two stocks tend to track each other to a certain extent as well. If you put those charts on top of each other, they do look close. Facebook also getting a downgrade. Is this a similar call?
It's the same call. It's the
same call.
The same note. It's
part of the same note and part of the same call. Okay. Who was the analyst downgrading?
Citigroup. I don't know the analyst's name.
Okay, that's fine. I don't know.
I mean, the Google chart looks a little better than the Facebook chart. Just looking at the Googs here, the Goog without the L. I'd say 23.45. It doesn't even look like we're going to get anywhere near that today. But your 2 and 3 day lows splits that, so we'll keep an eye. We're only trading $7 below the low from Friday, so maybe that's resistance. On the upside, I'll just keep an eye on 2,400. Nothing really special there. All-time closing highs above that. So, I don't know. Let it shake out 2350, 2400. Trade there a couple days this week and then continue the uptrend. Already did, as opposed to Facebook, it's already filled its earnings gap. And I'd be a little bit more concerned if I was a Facebook shareholder today. The all-time high was made on that day, on that earnings day. You had to own it. You had to be in the stock. It's come down since then. I think for this, I'd just be looking for a gap fill eventually here from that earnings day. So I'll call 311, 311 support, and then, minor resistance at the close from Friday. That's the first point you'd be looking at, 319.08 on a rally.
But we're down here, so 313 is critical. That's the level. That's the double bottom.
How come?
Three of the last
4
days.
Yeah, you're right. Good job.
So I'm just saying that 313 is critical, I think. If it takes that out, then you could start thinking, well, maybe this is going to see 300 again. So 313, as long as that holds, bulls in control. Lose 313, gets a little bit ugly. Remember, always Gil Morales undercut and rally trick too, where it go down to 312, and then you get a close back up about 314. It's actually sometimes the better buy is to wait for it to undercut, and then comes back up over it, and then you catch a few people shorting it, and then you could actually like higher. So I like those setups better, but this is, just such a difficult market to trade technically. This is a difficult market to trade, period. Short-term scalps are working pretty well. Day trading's going pretty well, but, the swing trading, like I said, has been very difficult because there hasn't been a lot of follow-through unless you're in those commodities that just are relentlessly higher. I mean, Nucor breaking out over $100 today. It goes up every single day.
Over 100. Good job.
Yeah, well, and remember, NUE buyers at 101. There is some size at 100 in the book. I didn't look this morning, but it has been there. So it could potentially hold the open down a little bit. But commodity prices just continue to rip. I mean, the reason for this is the inflation of real assets. And we've been talking about inflationary pressures. And right now they're grabbing anything that's real. That's why the high growth has been left out of the rally. But they are grabbing real assets besides crypto, which is in its own world. And they are just inflating the prices of everything. So I'm not surprised that gold and silver has started to show some life here too.
Finally, yeah.
Finally, you know what? And how are you going to keep them down? I mean, you've got, oil is consolidating and looking like it wants to break out again.
Well,
if it's something tangible and real like steel, lumber, corn, wheat, commodities, this is just inflation, and we have significant inflation. Don't let the Fed fool you. It is all around you, everywhere. Gas prices going up at the pumps. I mean, this is, basically everything you consume on a regular basis is getting inflated right now. So it's concerning. And investors are looking at that and saying, I want an inflation hedge. I want to be long real things. And that's why you continue to see money flow into commodities. And if you look, the Canadian dollar is super strong for the simple reason that commodity-based currency. So I don't know. They are all overbought. There is going to be a wicked pullback in all of that stuff eventually. But I think that pullback, again, what I've been doing is buying dips on value, selling rips on growth. That has been working like a charm, for a month. And I don't see that changing. I think if you get a significant pullback, I mean, the banks, and I didn't buy any banks, I should have, but, they got a little pullback there last week. They turn around and just start ripping again. So, and obviously they got the pullback there even on Friday. Yeah. With the jobs number being a little bit soft, and they're like, okay, well, maybe interest rates aren't going up anytime soon, and they hit the banks. The banks all open at the lows, and they turned around and they just bought them all. And the tech stocks, a lot of them all open near the highs, and then they turned around and just started hitting it too. I mean, you could see it not so much in the Qs. There's some value tech in there, but in some of the little growth names, those were another selling opportunity again. So the trend continues to be your friend. It's buying value and selling growth. I don't know what turns that whole thing around, but man, that is a wicked trend. And Spencer, you were saying you saw a chart on the weekend that the gap that I've been talking about has actually started to close fairly significantly.
I actually misread that chart that but
so it hasn't closed.
No, the gap between growth and value has closed dramatically. What I thought it said was that the gap between I thought it was saying that value has come in a little bit and growth has come back just a smidge, but in reality what it was saying was the gap here, I'll show you the chart that I saw.
The values continued to go up,
right. If anything, the values continued to go up.
It makes sense when you think about inflationary pressures, though. This is where
it's a chart from Bloomberg here, and it's measuring here. It's measuring ARC one of the ARK indexes, ARKK, against the value index, and it goes back to 2017 there, so you can see white is value, green is ARK, aka
That's
growth.
Unbelievable how quickly.
Yeah.
Like look at 2021, and it was basically the opposite, where ARK, everybody, when we were entering 2021, everybody had to own everything growth.
Yeah.
It was all the sexy growth names. It was the only thing that new ETFs were coming out there, all sexy growth names.
Yeah.
And value was just thrown into the gutter. And the 2021 has been the exact opposite trade. Exact opposite. Mm-hmm. If you've had value, you had these stocks that were underperforming for years, you're loving 2021. You're like, finally, like the Karen Finermans of the world, who are big time value investors, Warren Buffett of the world. Even me to a certain extent, although I've kind of got the more barbell approach, which maybe if you're a pessimist, it never seems to work out, because you can always say, I always got something going down. If you're an optimist, it's always working out because there's always something going up. But that chart in itself just tells the story of 2021. But it's been a value-oriented market, and growth has been completely out of favor.
Well, before we get too far away from it, you talked about the metals, and you talked about oil, and obviously there's news on both over the weekend. Let's start with oil here. I guess on the spectrum of cyber attacks, like, this could have been worse, but the Colonial pipeline, which supplies a little under half of all of the diesel, gasoline, etc., for like the Eastern Seaboard.
No big deal. There's no big deal.
It is still shut down.
No big deal.
It's still shut down as far as latest news that I saw after a cyber attack over the weekend. I've seen a couple of things as far as articles saying who's claiming responsibility, whether it's Russia or it's just a group or whatever. But the point is that they shut down the pipeline. Said it was more of an informational breach, not like a true systems breach. It was a ransomware attack, and they just stole some data. Well, I said they stole some data and didn't actually like influence the inner workings of the systems. So the pipeline shut down for now. If you're wondering why SHLX is down, they've got a stake. They're one of the owners of this pipeline, and Fire Eye's up because they're investigating this hack. So you got Fire Eye.
It's just this fairy tale market. I mean, so what? Hack half of the supply of the East Coast. No big deal.
Oh, that's what it will. It will shrug it off.
Yeah.
And you're right, Joel. This is a fairy tale market. It's a good name for this market. It's just living, but you know what? To a certain extent, some of the fairy tales. It's a tale of two markets, really. It's not such a fairy tale market anymore. It was in January 2021 when everything started to rally. But there's obviously been a lot of growth investors that have been hit pretty hard here. So the fairy tale has just kind of changed. The story of the fairy tale has changed. But you see a pullback here in some commodity names like or SHLX, and you think, okay, well, it's not even significant. I mean, here they're part of this, and it's down 20 cents, Spencer. I mean, so I don't know if it was off more earlier, but
it was.
It appears that investors are completely shrugging this off. Really?
Well, I said on the spectrum of cyber incidents.
Yeah.
This one maybe is not the biggest, but it's not nothing either. It's not to say we should shrug it off.
I was looking at the cyber at the what do you call it? Cyber stocks?
Like cyber
UFO,
Palo Alto,
hack.
Yeah, the hack stocks. Yeah,
UFO.
Cyber attacks, hack stocks. PANW. They've all come off. I mean, I have these on my watch list now. Like FireEye has come off substantially. CyberArk, I sold that at 160. It's back to 120. I originally bought it at 110. So I went from 110 to 160. And it actually 2 days ago almost got there, 113. It's like, maybe I should reload that one. I think you get down near $100 on CYBR. It gets interesting here. And I know some of these are going the opposite way today, but they're not having a significant rally. I mean, CyberArk's up 70 cents. So I don't know if this is a kickstart for them, but cyber attacks are not going away. So, if you want to talk, names that maybe have been beat up and maybe, there's some value here at some point in time, FireEye, if it got down in the mid-teens again, at 1920, it's still a little bit inflated, but back at 15 was pretty good. I mean, that's the one thing about, the growth names and even the Cathie Wood names is they're all bloody oversold. So, and yes, I give Cathie a lot of heat, But I'll tell you, her names are all oversold. And what that means is they're due for a bounce. So even look at ARKK, and we can take this conversation over there. It bounced right where it should have bounced, Joel. If you look, it bounced right at the March lows. So last week we had a little bit undercut, but we held holding on. So
right there.
Yeah, it's right there. So if you're long our ARKK, it bounced at the level you want to see it bounce. So I give her some love here this morning and just say that I think the rotation eventually, some of it will come off. It's been such a wicked rally that the value names are so overbought now. Like if you're coming in, and I've been saying this the last couple of days now, if you're coming in and now buying value and now selling growth, you are so late to the party. I mean, you're doing it completely backwards. So I am looking at some of the growth names now. You've got to be selective. But, some of the growth names that were ridiculously priced have come down and are more reasonably priced now. So you got to kind of be selective. Like a Penn Gaming I talked about last week. It's been hit pretty hard from 140 down to 80. They still got Barstool Sports. They still have casinos opening. They still have online gaming. They have a lot of good stuff going on. Valuations, yes, still a little bit extreme. Even DraftKings.
Oh, did you see that? Did you see that off the report?
Yeah. It's been hammered from $75 to $48, 47 this morning, Joel. So you start getting down the low 40s. I'm rating these down. DraftKings and Penn. You know what? I think eventually, if we stay in a market where it doesn't all just start crashing and burning, which it doesn't appear to be going to do, SPY keeps rotating higher, eventually the rotation will go back into growth to keep us up. So all it is rotation. That SPY just
profit taking in the value.
Yeah, you'll get profit taking in some of the commodity stocks, and then you'll get all of a sudden you'll start to get some, a spike up maybe in some of those growth names. So here I am this morning. I'm going to say that some of these growth names are starting to get to a point where they start to look more attractive. They were crazy, when Penn went to 140, it just got way overdone. Getting added to the S&P,
S&P, that
way
was
overdone. It's come off. It's down 40% almost from those highs.
It's huge.
So there is, and this is a good name. I love Portnoy. He's funny. Barstool Sports. We love Barstool Sports. So you're getting a chance now that looks pretty good. I kind of like the 80 levels. So you know what? On Penn,
80-15 too.
Maybe you don't go all in.
Low.
Yeah, maybe you don't go all in. But maybe you start nibbling here. And if you get hit, it depends on what your portfolio looks like. If you're loaded up with growth names, you don't want to be all loaded up in the same type of name. I don't have hardly any growth. Whatever growth I had became a lot less portion of my portfolio because they went down 30-40%. I have some stocks that are down 30-40%. Fisker, which obviously I reloaded at 15, has been a complete dog. I still think Fisker's good long term. If you got a long time horizon, I think Fisker, but they're not making cars till the end of 2022. So you got to go a year and a half without revenue yet, and they hate companies that don't have revenue. So this is not, in favor whatsoever. I like Penn. I'm eventually going to start liking DraftKings, I think, if it gets down to the lower 40s. Just nibbling. Just adding some growth in there because value has exploded. Growth has been hit. I think that gap that has been crazy closing could start to stretch out a little bit again because it's just closed too much too fast.
I just got a good feeling or a good take on this ARKK chart, just the way it's setting up. Dennis, you mentioned, matching that March low. So it stopped where you wanted it to stop, right? 105.68, Thursday's low. Your low here, 106.25. So 106, that's your major level. And then I look on the upside here and I see a pair of highs right at 115. So if you want to get on the bandwagon when this thing is actually going up, that's a pair of highs. That is very interesting to me. What I'm worried about is that now you hung out at the low here, you got away in one day. Here, it took 4 days to get away, but it got away. So here you are again. If you can hang in here a couple days and not, get into like 107.5, 108, where you don't have, very far to take it out. So that's important. I think you got a couple big days for Kathy and at least this ETF. I like the setups. I like leaning on the low. And then I think you get above 115 here. then things open up for meaningful retracement of this big move. Spencer, you gave us some news. You put it in the doc about Archegos. And Kathy.
Yeah, Kathy mentioned this. She was on with CNBC on Friday afternoon, and this came out that Archegos seeded Arkansas.
I didn't know that either. I don't know if anybody knew that.
No
that
one
was
knew,
a big
no one knew that.
bomb there.
Kind of.
Like, whoa.
Kind of. Yeah.
Yeah, surprised the market there. Not a big deal. It's just surprising, like you can see how
it's not a big deal in that, like, the Twitter jumped all over it, and they spent the weekend connecting the dots, right? You get like Archegos,
right.
ARC, you get gamma squeezes, you get short squeezes, you get SoftBank. It's all connected.
It's a fun story.
It's all connected somehow, right?
It's a fun story to try to put pieces of the puzzle together. That's what media wants to do, is have a fun story to put pieces of the puzzle together. And here they just all of a sudden just link two separate stories together. So I'm sure the mass media is trying to put all those pieces of the puzzle together. But
give me another Kathy ETF here. ARKQ.
ARKW is what I'm.
ARKW. They're all holding at the March lows. That's good news, folks. That is good news. I've been hating on Kathy for a while here. I'd go neutral Kathy right now. Maybe not necessarily, and maybe you could try. You can try anything, and you got a level. So, some of my best trades have been like, well, we'll give it a shot here, because you know what? It bounced at the lows. ARKW, almost a perfect bounce. 132.70 the low in March, 132.46 the low on Thursday. It had a nice bounce, and you're pulling back this morning, a little bit of growth names. You have a level to lean on. You could literally put this on and stop yourself out for $5. And, if growth turns around, you can laugh all the way to the bank. If growth still gets hit, well, you take your 5
take a small hit. Yep.
You take a small hit and you move on. I've already tried growth once. I might try a few growth names. I might try a few growth names onto this morning's pullback, because growth is pulling back here again this morning. If it takes them out, it takes them out. But, it's hard. It's hard because you're fighting the trend, right? So these are always harder trades. And you do lose on these more often than you're going to win. There's a lot of trend traders. Christian Fromhert's one of the best ones. It's easier to buy the dip on value than it is to buy the dip on growth. But sometimes you can take a shot. So this is a tougher trade, though, because you are fighting the trend. You are fighting that significant downtrend here. So in all likelihood, there's going to probably be more sellers that are going to come in and eventually take out those lows. But right now, the risk reward isn't bad at this point, because you have a low that you can lean on. When they're just free falling, I don't like doing that. But only reason I kind of like the ARC trades right now is that they bounced at the March lows on Thursday.
Yeah,
and
March too.
Held up.
Yep, that was March in this one. This went down to the March low.
And they're so oversold.
Yeah, but also, Dennis, you're totally discounting, and you're not totally discounting, but this thing, the move from 40 to like what was this, 185 or 191? You're just saying that
way overdone.
Yeah. So
when you look at that bottom right chart, you're like, holy mackerel, this could get ugly. And it could. You gotta stop yourself out, folks.
Good.
Don't get yourself stuck. Don't say, okay, I'm going to buy it at 136 because I think we could bounce here. And then it goes 132 and you're like, well, I don't want to lose the $6 and get stuck holding it, because then you're going to become a bag holder. And don't kid yourself. There's still a lot of fluff in this. There. Like Joel's pointing out, a lot of fluff. We've run from 40, and maybe you got to kind of, one thing on the charts is people want to look at where the stocks were in March of 2020. You almost, at this point in time, have to eliminate those prices from your train of thought. Where were they before COVID started? Because it looks like we're coming out of COVID, and there was complete mispricings of everything. Nobody knew what was happening there. We didn't know we were going zombie apocalypse. We didn't know if the death rate was going to start climbing. We didn't know if we were going to lose millions of people in the U.S. We didn't know any of that, and they were just selling first and asking questions later. Stocks like Wendy's trade down to like $3. Wendy's actually turned out almost benefited from the pandemic. We were selling Teladoc, TDOC, even on the initial, if you look back to March, even initially, it started getting hit. Bad example. But there was some stocks that actually turned out to benefit from it that were actually getting hit. Take-Two was one. Take-Two initially started getting hit on in March of 2020. And then they're like, oh, no, wait, this benefits from it. It took like a couple weeks for people to figure it out. It was a whole new animal. People didn't know, what to think of anything. So I'm just saying, if you're looking at, where a stock has been from, somebody's pointing out, well, Penn Gaming was $3 in March. Well, really, should it have ever been there? Probably not. We weren't going, we thought, there was going to be companies that go bankrupt. We didn't know the government was going to come out and bail every single thing out, not the penny to bail out, but, with the stimulus money, with everything else, there was very few bankruptcies in 2020 overall.
What you're saying is use February 2020 as a book.
Yeah. I'd say use that more as a gauge of where it's come from. Like to say Penn came from 3, Penn really came from like 20 to 30.
Yeah.
And now you've got Portnoy's influence has really, kicked it up since then. So is it worth more than $30? I think so. They had a fair value before Portnoy at 30 to 40. So what's Portnoy worth? He's worth a lot. He's a major influencer. He's out there. I mean, Barstool Sports, it's funny stuff. All the people they have there. I think it's worth some money. That's why I don't mind Penn at 80. Would I love it at 60? I'd back up the Chuck at 60. That's where I originally bought. I originally bought 60.
Oh, look at the monthly.
And I sold it at 105 or 110 or something on the way up because it was a double. Yep. It was double for me. I got away soon. I ticked off, went to 140? Sure, because but you never get the whole thing. But I got a good chunk of that move. It pulls back to 60 and lets me reload at my original price. I think I do it. I think I back up the Chuck all day. I'm a little early. Am I early at 80? I might be, but maybe I want to nibble. Maybe I want to take a shot, so you don't have to go all in, and that's something that a guest was saying last week. You don't have to enter. It was Sean that was saying that. You don't have to enter all at once. Kathy Wood does not enter all at once. She enters, like Sean was saying, 500 times. She buys every day for months. So maybe not 500 might be an exaggeration, but she might buy something 20, 30, 40 times. So you want a little bit of Penn? Maybe you pull the Kramer and you say, I'm going to put 25% of my money in it now. If it goes up, I'm participating. If it pulls back down, I'm going to add a little bit more.
Can I interrupt this stream of consciousness for
stream of consciousness?
Breaking news on TTD here. The trade is already over, but now it's reversing. 10-for-1 split. TTD just announced it.
Okay.
They're doing a stock split. It's going down?
It popped. It popped over 700, Dennis. It popped to 712 and a quarter.
Holy.
Yeah.
That all just happened while I was ranting.
Yes, that all just happened while you were ranting.
They announced a 10-for-1 stock split, which the market seems to love. And it pops $50 on the news algos. There's your algo that just continues to lose money. I don't know who's running it, but man, they do it bad. And now it's just tanking. Why is it tanking? It's now down 20. It just lost. So the news algo that just bought it up at 700 is puking it out.
Why did it go up in the first place is another question.
Well, they like those, but now it's really it's down $30.
Why is my question? Why?
Now you're down 35.
627. 627. Friday's low. 627.
What's the low, Joel?
Friday's low was 627.
$600. This thing gets anywhere. You just dropped 40. You just dropped $60, $80 in a matter of a minute or two.
So
this thing gets anywhere in you're gonna. I don't think it's going to continue to fall here. So I call it live on the show here right now. I think you're gonna see some buyers in the lower 600s here. I don't think this continues to go down.
Yeah, it hasn't taken out. It stopped. It looks like it stopped trading here for a second.
It's wide. It's 12 points wide right now, trading odd lots in the middle.
There's 28.75. Anyways, you're getting a look at. That's a big split too. 10-for-1.
At 620 was whoever just bought 620. I think is going to make some money on it. Yeah, 620. Well, maybe not. 630's got some offers there. Look at this person coming
615.
in. Look at the offer. This is really interesting to watch. $600. $600.
I'm 592 bid.
We're trying to call. And obviously it's just opinions. We just have opinions here, but this just got way oversold. Now it just went from silly buys to silly sells, in my opinion. But I don't know. We're breaking news. Maybe there's some other headline. Did they say anything else?
Not that I saw.
Just a 10-for-1 stock split, and all of a sudden we decide those stock splits are bad.
My bad. Well, there was earnings. My mistake.
Oh, that was
Spencer.
Come on. It's missed you, Spencer.
Spencer.
I didn't have.
All right, me and Joel pull everything we just set off because we were told it was just a 10-for-1 stock split. They missed huge on earnings. 45 cents versus 77 estimate.
Mitch, where are you? Come on in, Mitch.
Holy Spencer.
Mitch is coming in for relief.
I'm looking at 10 screens at once.
I should have brought the Pro up myself. The Pro has it there.
The Pro did have it, and I was now looking at it.
That's a big difference. Okay, 10-for-1's awesome. You notice how they hit the tape with the 10-for-1 first before they showed the crappy earnings.
Yeah. That was dirty.
They wanted it was dirty. Let's pop this a little bit so then when they hammer us on our crappy earnings.
You give the bad news first.
Okay, the technicals still hold. 5 591 was the low, the double bottom. Let's see what it does if it does that there. But I couldn't understand why I was tanking on 10-for-1 stocks.
All right,
big earnings miss. That's a big story. They did give guidance as well, and the guidance is not great. They see Q2 sales 259 to 262 versus 253 estimate. That is not growth numbers for a growth stock.
This doesn't make sense. Like, how can Facebook and Google come out and say, "Oh my God, we made so much money on digital
advertising," and they're not? I don't know.
Trade Desk is in the same business. How could this have been so bad for them?
That's what the market's saying. That's why they're hammering it down here now.
Yeah, it doesn't make sense to me. I don't know. And thank you, Mike Britton. They announced the split. The news of the split came out before the news of the earnings.
The news of the split. They were dirty on that. They hit the tape. We look like we're going to test the 591, Joel.
I know.
But that's a big earnings miss for a growth stock. One, the growth stocks can't miss earnings. So, well, let's see if it bounces at 591. But it's scary to buy these things when you have a growth name, and they're probably going to talk about it on CNBC in a minute. Miss.
That was going to be down. Yeah. Then
the 10-for-1 stock split is cool. That's what. So obviously, here's the management's thinking, in my opinion, is like, okay, we didn't do that great this quarter. What can we do to help our stock out? Let's do a 10-for-1 stock split. Well, that helped a little bit. It helped for about a minute. And then the real numbers came out. They're like, no.
It actually
these are not growth numbers for a growth stock.
It actually helped for about 30 seconds, not even.
Wow.
I mean, stock's 45 cents on the quarter. I don't know if that's,
you're going to get a look at 592
or anything. But if you're making a couple bucks, let's just give it and say it makes, $3 a share for the year. Well, the thing's trading, what is that? $3 is trading 200 times earnings. Is that right?
They're probably gonna adjust the stock split after this, like only do like a 8-for-1 or 7-for-1.
Well, I don't know how much money, and it's a growth name, but if you're not growing, that's when they hammer you. Man, poof, those are not good numbers, folks. Sorry, I'm out on Trade Desk. Don't want it. Not at those numbers.
All right.
Even though you got a nice level of 591, you still have the level. The level is still there.
If I was short, I'd
bring it in if I was short.
Yeah,
but I'm not buying. I'm not buying on those dips now. I was saying when we just saw it was 10-for-1 stock, but I was like, I'll buy this down at 600 if it gets there. And then you see the bad earnings, like, oh no, thank you.
So, I never even got to it.
They screwed that news algo, eh? Drop the 10-for-1 stock split first. The news algo buys it up, and then they hammer them with a bad earnings report. Was it scheduled though? It was scheduled. Yeah, it was scheduled.
I didn't have it on.
So you had to know that the earnings were coming too. It was on the schedule. It wasn't like out of the blue. So anytime you're trading earnings, it's crapshoot.
Yeah. All right. It is 8:36. Let's bring on Tim Quast and do some Market Structure Monday. Tim Quast, founder and CEO of Market Structure Edge. How are we doing today?
3 of my favorite faces. Good to see you guys.
We're always excited to see where you are this time.
Don't get used to Spencer's.
He never, this is Tim's thing, he never broadcasts from the same house. He owns like 100 houses, and he's just broadcast from all over everywhere. You never know where Tim Quast is. Where is he today?
No, he's in Austin.
And as I've said before, if you want 100 houses, use Market Structure Edge. And
there you go.
You too can have 100 houses. I'm actually in Steamboat, and I can see Mount Werner, which is still laden in snow, out the window here to my left. So but that's good. We see snow on the mountains mid-May. We know we have a green summer ahead. So that's what we want to see.
Is that the saying?
Yes.
Snow on the mountains in mid-May.
Speaking of green, it's unfortunate. I caught the tail end of that TTD Trade Desk discussion. Wow. It was
there it is, 592.
We're at that level.
Well, and it's there's always a market structure lesson. TTD was before this decision, and had they asked me, I would have advised, and I get asked all the time by public companies, should we do a stock split? So TTD was in the top 20 most liquid stocks in the US stock market. And it actually has had, as you know, Dennis, fairly good trading characteristics. It's being affected by the shrinking demand for equities that's occurring right now, and we can talk about that if you like. But when it's an important concept, traders, we use that dollars per trade metric on the Edge platform, and we tell we use it for public companies to help them understand, well, if volume and liquidity are not the same thing. Liquidity is how much of something I can buy before the price changes. Why does that matter? Because if the price changes on you, you may miss the entire gain you were hoping to secure by buying the stock. And so TTD used to trade before the split at call it $20,000 to $25,000 a trade, thereabouts. Very, very good liquidity. And this will do damage to them. I'd like to know who advised them to do a stock split. It's not the thing to do in a Reg MS market.
Well, it's the earnings here, Tim. They just
Right.
the earnings were not good. I mean, if you just take it out and extrapolate, what do you have? And in the background, Spencer, do you have the earnings estimates for the year? I'm curious because I'm just trying to grab a multiple on this. But when we just extrapolate the 42-cent quarter that they just had throughout a year, you can quickly see maybe they're going to make $3-4. I mean, if you even give them, let's say hypothetically on the high end they were going to make $6, it's trading 100 times earnings, Tim. I mean, this is not the kind of stock that this market likes right now. And now you have an earnings myth for a high valuation, high PE name. Down 10% is not surprising in an environment where they're not buying high growth to begin with. And then when you miss, they were hitting, we've hit some growth names on good earnings. These are bad earnings. So
exactly. And look, once again, if you want to see this through and for anybody who's new, we talk market structure here, and market structure is the behavior of money behind price and volume in context of the rules that govern it. I always say price and volume are consequences. They're not metrics. If you're measuring price and volume, you're measuring something that is happening because of something else. And we want to know what the something else is behind it. So if we look at TTD, I'm going to share my screen. So by the way, if you guys are following along here, go to marketstructureedge.com. And you can do the same thing. You can, if you just want to follow along here, it's really simple to sign up. It doesn't cost you anything, no credit card. So I'm going to share the screen here. And this is the dashboard. And before I get to TTD, this is a fascinating thing. So all you have to know, if you've never seen this before, is we want to know what the trend lines are in market structure sentiment by any measure. I have a 75% short portfolio there. But look at all the lines. Everything should be up and to the right. An up and to the right kind of market, as with fundamentals or technicals, maybe you want to say, is the kind of thing you want to buy. There's almost nothing that looks like that. Building materials are still here, but they're also getting well to the overbought range. Yeah, here's where you want to buy, right? As it rises above 5, short volume's very low. There's almost nothing that's appealing. I was looking over the weekend. Scary. I couldn't find anything that looked good. I don't care what, COVID-19, this portfolio may offer some opportunities in a few days. In fact, if I picked something, I would say Dexcom maybe is an appealing stock. And I've not lost my train of thought about TTD. I just want to look at Dexcom, $15,000 a trade. That is a liquid stock. That's what you want. I mean, that's a low risk thing to trade. You still have to be nimble. But let's go now and look at TTD. And of course, it's going to show the old liquidity because this will reflect data as of Friday.
Yeah, not the earnings
pre-split. So there's our Benzinga May 10. Even that, though, trend lines don't look good. All right, so if we go look at TTD, here's it's about $20,000 a trade. I was a little over, but this is pre-split. TTD was 3.6. Sentiment falling. You want to buy sentiment rising over 5. So that right away tells us not good. Passive money is selling this, and it's 47% short. That's not bad, but they're going to destroy their liquidity. This could drop them all the way to the bottom of the Russell 1000 from a liquidity standpoint. You've got to be about this level. Appian is at the very tail end of the most liquid 1,000 stocks in the market. And so why does that matter? Well, that's what the big money wants. If you're creating and redeeming ETF shares, you don't want something that trades $500 a trade. You want something that trades $15,000, $20,000.
You gotta be able to get in and out.
Exactly. So if you look at TTD reflects. So here's where you would buy it. So when it ticks above 5, now you got a sentiment above 5 means more demand than supply. And so stocks tend to rise. It's not a perfect metric, and it's been challenging. But then when sentiment reverts to 5, this is where you want to leave. And notice that short volume is very high. Sentiment ticked up again. It never got back to 10. This would have been challenging. Even from a market structure standpoint, this would have been challenging because you'd say, well, it ticked back over 5. Isn't that a buy? Well, as sentiment peaks, you have to get out. You take some losses on that. But you
Tim,
can
I throw a quick question in here?
Yes.
I like, what you're talking about. We talk about a lot too, is when, a stock's going down, it's going down, it's going down. And sometimes you're better off saying, hey, show me, like I was looking at ARKK, show me you can hold 115. Do you find, with your in your analysis, when the things do cross back over the threshold, that it does coincide with like a double top or some kind of technical level where the stock is coming up, you miss the bottom, but your bottom is you're out, now it's showing strength. Do you notice any technicals that coincide with that, a double top, a triple top, or breaking descending lows or descending highs, anything like that?
I'm not an expert on technicals. I'm an expert on market structure. That's how I think. And my issue with technicals is that it supposes that all prices are equal. And how I think about this is the price is set by, say, fast traders, as opposed to, so here, for example, Microsoft. See this behavior right here? It's informational here. And I will answer your question. We feed these behaviors into this measure called market structure sentiment. It says there is active stock picking, which is about 9% of trading volume. There is passive investment behavior. Let's call it 20% of market volume. There is fast trading, 55% of trading volume, and then trades tied to derivatives, call it 18%. Put all that together, close to 100%, within range there. So if you have a double top on fast trading, that double top can come away from you like that. So if it's passive money tends to take 5 days to finish what it's doing. Are we moving money from materials over into consumer staples? Well, you can't do that in a day. But Citadel, because Citadel wants to end the day flat, can take 50% of market volume, boom, move it, and bam, be gone, just like that. So that's the difference, and that's the trouble. I can tell you what we observed from a market structure standpoint in all these tech names. Like take PayPal, which had great results. We ran some data for PayPal to help them understand what would happen when they reported results. They came off a very strong 10 out of 10 top, but then they could just barely get back to 5. Remember, we just want to buy the rise over 5. They did a nice job. We expected the stock would rise looking at the data, but it was primarily because of short covering. So if you were looking at this from a technical standpoint, how would you look at PayPal from a technical standpoint? I would look at it from a market structure standpoint and say, their money's leaving. And this is what troubles me. It's not showing up everywhere because energy, for instance, which has been the new tech trade, is 2.3% of market cap. So you'd look at energy and say, wow, the money is just pouring into energy. And then you come over to tech, 28% of the market by itself. And if you look at communication services and consumer discretionary, which is where a lot of the big techs are, and you see, wow, they're weak, you would look at this and say, here is a warning for all of us. The great behemoth of tech, which drives the market, is seeing the gradual withdrawal of money. I think big institutional money is reducing its exposure to equities. I don't know how long that'll last, but that's where it's showing up, and this is very concerning to me. I'm not saying the market's about to fall apart.
Well, here's another concerning thing too, Tim, is let's just think about all the money that is being dumped into crypto, and there's so many different. I mean, that has to come from somewhere. Right. I mean, yes, you can say, okay, it's all Fed, it's all free money, and we're all getting stimulus. But let's really put it in perspective. Right. A $200 check, here or there. I do believe you're probably seeing some money. I mean, I bought some Bitcoin and I bought some Ethereum. So that money is investable money that would normally go into stocks, but it went into crypto.
That's
gotta impact at a certain point. If we keep piling money into alternative investments. And it's not
Right.
just crypto, it's
Right.
alternative investments is really what it is, because the collectible market has been very hot. I mean, at a certain point in time, that money's got to come from somewhere.
Yep, I agree with you. And to your point, here's Microsoft, and Microsoft is a touchstone for the market because it's, what is it? You help me out, guys. It's 1.7 trillion market cap.
You're around there, yeah.
Yeah. So if Microsoft cannot get back above 5, I think this all goes back to Archegos Capital. So we saw the damage in March. We said in April, is there going to be the same verve in terms of leverage, the willingness of big banks to commit capital to help people trade? And I don't think there was. And there's your top. That's the top for Microsoft. Since then, it cannot get back to 10. It will ahead again, but you look at this and say, if Microsoft cannot get back over 5 and it's spending more time now below 5 than above it, we have a market that could be in trouble. It's not Microsoft. Microsoft is essential to the market. There are 5 stocks that are 20% of market cap. And if those 5 stocks can't get over 5, you would, as the head of security at the little liberal arts school that I went to in the piney woods of East Texas would say, go grab little brother Willie off the porch.
Yeah.
And so I think, that's telling.
And it is concerning. I mean, and we have seen, all those stocks that you just talked about, those top 5 stocks, all report earnings, all get hit on good earnings reports. Really, we bounced back in Google, it's bounced back a little bit in Facebook, but they came right in after the good earnings report. Microsoft had good earnings and they hit it. And they've bounced the last couple of days, but if they decide to resume, what they did 2-3 days after the earnings reports there, then it starts to bring down the entire market. So that they're holding the market up. It's these 5 stocks that really run, that they're driving the ship. And they've been driving the ship for the better part of a decade. So, you load up with SPYs and Qs, you got a lot of these 5 stocks.
Exactly. And you traders, you might say, well, why is this happening? Well, if 95% of market cap is in the 1,000 largest stocks, and behind the scenes, the big investors who are advising people who have retirement accounts, and those people in the retirement accounts say, well, we're concerned about how rich the market has become. What if people just simply change their allocations? Dennis, to your point, is it possible that we're seeing some democratization of investment in cryptocurrencies? And if some money comes out of equities or wherever it is, what if money comes out of both equities and bonds and goes to cash? Well, we will only see the effect of that this way, where sentiment stops delivering the kind of surge that would tell us that the same amount of money is coming into the market. I think the beginnings of months and the ends of months are very important for those reasons. Ends of months, portfolios get trued up. Beginnings of months, that's when the inflows come into the market from 401k. I do it myself, right? 401ks and so on. And if that money doesn't get deployed to the same level, the stocks that are going to tell us that are in tech, because that's where the market cap is. It's the old adage, the old Sherlock Holmes adage that I've used before, and stipulating that is a fictional character. And should we take advice from a fictional character? The Holmes adage was...
People invest in fictional currencies.
You're right. It's the same thing, right? Yeah. Well, I mean, what's the difference between $1 and a cryptocurrency? I mean, what is $1 worth? It's a fiat currency.
It's such an interesting conversation because, when you look out and you look under and look really what's in these indexes here, some of the performance isn't that great, despite the SPY making new all-time highs.
Exactly.
So it's such an interesting market that it should be like, normally you're looking at SPY making new all-time highs and you're like, everything is rocking and rolling. But you're looking, tech growth has been hammered. And we didn't have a great response to the tech earnings. The thing that is holding us up is the rotation, where the banks are making new highs. Some of obviously the transports have done very, very well. And then you've got the commodities doing well. And that's an inflation trade. I mean, you can clearly see that, people are driving into the transports and they're driving into commodities because they're worried about inflation. And I think they should be worried about inflation. We're seeing that. The question is, though, is that sustainable to keep the indexes up, or do we eventually succumb to tech, not performing like it was? So it's a scary market to just go all in, and we're at all-time highs. It doesn't look as healthy as the markets are indicating.
Exactly. So that adage is, once you eliminate the impossible, what remains, no matter how improbable, is your answer. And if you eliminate the impossible, which is that the market can sustainably rise without tech, then what remains is the answer, that money is leaving the market. So how is it possible for SPY to rise? SPY is derivatives. It is not the underlying stocks, and we track that. I looked at the underlying stocks. Once again, there were huge divergences. A lot of the market is declining. If you if you sample communication services, has 140 companies in it. If you take 23 of them in an ETF, it can appear that communication services is up. It was down 0.5% last week. It's just an illustration. You could take a tiny sampling of the market and it appears to be rising. Energy's doing great. Here's the big financials you were talking about, Dennis. So you're absolutely right. This group has carried the market for a month. But look what's happening. It too is topping. Short volume is approaching 50%. Those conditions always precede rotation out by big institutional money. So yeah, I completely agree. I think, and again, I'm not predicting that the market's about to fall apart, but there's this great proverb: the prudent foresee evil and hide themselves. I would look at this and say it's about time to hide.
I think so too. I've been saying it, and I've been wrong here. I've been saying it for the last week that I've raised as much cash as I've had in a long time because I'm concerned about that underlying. And this is my trading is different. I'm trading. I'm in and out. I'm in and out and out. But my long-term retirement investment portfolio, I'm up to 40% cash, which is as much cash as I had before the COVID crisis, just for the simple reason that I don't like some of I don't know where to go. I don't see, like you were saying. I was saying last week, I don't see a lot of like the value names are kind of all overvalued now. The growth names are all out of favor, and it just doesn't look as healthy to me. So that's why I'm concerned. I wanted to see, and I do own Nucor, NUE. I wanted to see the market structure on Nucor, because here's a relentless stock that has just been running and running and running and running. And now it's over $100 here in the pre-market. I mean, here's a stock that's went nowhere for a decade and just doubled in the last 2 months. I'm curious what your market structure shows, if I should be ringing the register on my NUE, although I probably will hold it.
And if you're just tuning in, this is marketstructureedge.com. You could do the same thing. Materials, that trend line looked pretty good. Materials is one of the 2 or 3 spots that still indicates some modest upside. But there you go, Dennis. If you just look at it, look at the key metrics. Nucor, so 10 out of 10 overbought, topped, 59% short, very liquid. Passive money is the leading behavior. It was 98.76 on Friday. So yes, now stocks at 10 can continue to rise. And notice, look at Nucor's been above 5, at or above 5 for how long? Well, for all this, here's your entry point right back here in February, and there's been no reason to leave. I still wouldn't leave, but look at that. Well, look how high short volume is. So each time that short volume has popped this high, it has slowed the price down. Doesn't mean you have to leave. If you are holding this stock, you've done exactly the right thing, because the hold, it's never been below 5, and it's still not. So if you wanted to stay someplace,
stay till it goes below 5.
Yeah, right. Your risk is you're 60% short, but that's been okay. The data historically tells us as long as it stays above 5, you're okay. Drops below 5, you're out.
It was an average size position in my portfolio, and because of what it's done, it's starting to, it's funny, as and this is what a portfolio manager's problems are when they're more passive, and I would take a passive approach to my long-term investment portfolio. As performance happens like this and you have a stock double, it's like, oh, I got a pretty good exposure to that stock all of a sudden. And sometimes I back them up, like MasterCard I had bought back in the day, and I kept lightening it up because it just kept going up, and I was like, it runs up to like 6, 7, 8% of my portfolio, and I was like, okay, it's too big, I'm gonna bring it back down. And then it keeps running, and then it gets back up. You took a chunk out, but it attempts and comes up again. It's a good problem to have when you have performers like that. But at the same time, if you've got, just one stock, I know Jason Raznick talks about all the time, where Tesla has just taken over his portfolio. Probably an average size position to start, and the performance has just been so strong. At one point in time, I'm not sure if it's still there, but it's over 30% of his portfolio. So there's some exposure there all of a sudden. But I mean, it's been great exposure because the stock has continued to run. So, it's difficult to argue with the performance there. But, this is a portfolio manager's problem, a good problem to have when you have stocks that are really doing well, that they can actually take over. And sometimes there needs to be some adjustments made just to get your exposure down from the one stock that's really run.
You've just described exactly what institutional investors do. So that was a good education for traders to understand. That's exactly it.
Tim Quast is founder and CEO of Market Structure Edge.
Have a good week, guys.
Monday for Market Structure Monday. Thanks a lot, Tim.
Tim's always good.
I don't know if you're still watching the Trade Desk. I know Joel was during that, but it got down to 572. And Dennis, to answer your question from like a half hour ago now, there is no guidance for the year from the Trade Desk, but if you go off of last year, their EPS last year was $6.40 for the year.
You can easily say this is probably trading 100 times earnings. 100 times. Still. Stock. So, and this is what we were trying to teach people last week. Just because a stock has come down significantly from its highs, you look at the people who are newer to the market look at, Trade Desk was 900. It's 500. It's cheap. This is not a cheap stock, folks. This is not a cheap stock. And if the growth slows, you can see this is where you see tremendous falls. Is it a good company? I think it's a good company. I don't know. I follow closely enough the digital advertising world. It's not my fundamental expertise by any means. But it's a named. It's been a solid company for a long time. But trend is breaking. Here you're clearly taking out the March lows, which is not good news. And you have a stock that's trading 100 times earnings that just potentially didn't report the best guidance and reported not a great earnings report. So is it going to take some time? Value investors like myself, like a Karen Finerman, like a Warren Buffett would look at this and say, 100 times earnings? No, thank you. The growth guy says, well, the growth just slowed. Yeah. So who is buying? All you have is a few people buy the dip that because stocks always come back, but really it's institutional money that really drives price. And if the value investor says no, and the growth investor says I'm out right now because you just told me growth is not that great, at least in the immediate future, you have that gap in what I talk about where a growth stock to become a value stock has to fall tremendously. At 100 times earnings, I'm not interested. At 30 times earnings, I probably am. But at 30 times earnings, the price is $200. So it's a tough to just jump in here at 580 and say it's going to come right back because unless they say something tremendously different in the conference call, they just disappointed investors significantly.
All right, I think there are people that are a few minutes behind that are catching up on the Trade Desk thing. So I'm sorry, everyone. I'm sorry.
No, they did it, Spencer. I take it back. If they put it out 10 minutes before.
It was out before.
They dropped the 10. It was kind of dirty the way they went. If it actually went down that way, it looks like they dropped the 10 for 1 stock split and then they came out with the earnings miss.
That's what
the stock popped.
That's what happened
on the initial 10 for 1 because 10 for 1 split. We love splits.
I'll show you the Benzinga Pro. This is
then it was an earnings
press
miss.
release newsfeed 829. Press release, stock split. 1 minute later, press release, earnings report.
I've been hit on that before where a company has announced a buyback. And I was like, oh, it's a buyback. And it wasn't a company schedule. And then a minute later, they dropped the earnings bomb and they missed earnings.
Yeah.
And I'm like, they just totally screwed me on that. Here, buyback should be a good thing for a stock. It wasn't scheduled reporting. I can't remember. It was like a couple of years ago. And I got hammered on it. I mean, that algo that bought on that 10 for 1 split announcement just got hammered on this because they didn't drop it. They should drop the thing all at the same time. And sometimes, they don't. They drop the good news. I'll give you the good news. My wife at the bank used to call it the shit sandwich, where, when you had bad news for somebody, you always give them something good right off the hop. Like you give them, okay, yeah, your account's not, but you give them something good, then you feed them the bad news, and you try to finish with something okay. And then, it usually makes the person feel a little bit better. So you always give them something good right off the hop. So they kind of just fed us that. But you know what the end result was? The TDD? And then the end result was the shit sandwich was just shit.
We didn't even talk about SNL or Elon or Doge or any.
What's going on? What happened to us today?
I don't know if you guys watched it, but we watched it.
Oh my goodness, what is going on here? What? And the dog is on top of Spencer.
Yeah.
Joel, you look concerned.
Joel's always concerned.
My picture's from a decade ago.
Hey, actually, I saw Joel in person for the first time in over a year yesterday. Joel and I were physically in the same room.
That's cool. The world in the U.S. is going back to
Dennis,
normal.
I should have showed
can't
you.
Buy
I got
clothes, but that's okay.
Moose Mentum in the pre-market chat sent me a picture. I think it was a 5x8 of autographed picture of Vladdy Konstantinov from the Red Wings. Yep.
I wasn't a fan of Vlad because I wasn't a Red Wing fan, but I tell you, when you played Vladimir Konstantinov, nobody played tougher than he was. He played a tough style. He beat on, defensive defenseman. Vladimir Konstantinov, one of the best, and he was tough to play against. Obviously, Konstantinov's still alive, though, is he not?
Yeah, but it was that.
I know, obviously, the accident.
Have you seen the movie The Russian Five?
No, I should watch.
You should, man. I mean, I know you got nothing to do.
We didn't give Connor McDavid the love either. 100 points in 53 games, folks.
Yeah, all right,
that's unbelievable.
Congratulations. All right,
155-point pace in an era where the goal scoring is down. Guys, unbelievable.
9:05. Everyone, let's get the week started off right with the good old-fashioned parade of likes. Hit that like button.
All right,
please. Thank you very much.
I'm liking the show for Tim Quast today. He was excellent.
I'll like the show for stock.
He doesn't know why he likes the show.
Splits. I'll like it for stock splits.
Stock splits. Who got Cameron on this?
All righty.
I hate the show for the TTD earnings report.
There we go. All right.
What's Workhorse doing? Everybody's talking Workhorse was for. Oh no, it came all the way back down. It was popping. Do we have a headline Workhorse?
Yeah, we have numbers from Workhorse.
Oh, it was earnings.
Yeah, so
didn't last, eh? You know what? Massively oversold, but just can't hold.
Can't catch a break. No.
Can't catch a break. Reported earnings. Oh. So it popped up to 10.30, 10.40 this morning. Now it's back down $9.73. Man, it's massively oversold. And I'd say 9.34, 9.44. If you were trying it here, if you're so inclined to have the guts to try the stock here, you gotta stop yourself out at those lows. 9.33.
Low of the move on Friday.
Maybe you give it to $9. You say I don't risk 10%. I don't like risking 10%, so it's not for me. But if you're a longer term trader and you think you can bounce, I'd stop myself out at those lows. But you're holding so far, so far so good. But the stock is
companies like this are in so early days, man. You got to be able to ride it out or get out of the way. I mean, that's the only thing.
And sometimes you ride these things out and they're not a fun ride.
Well, yeah, that's exactly it. So.
I mean, when they lost the USPS contract, we got hammered on that bar that day. Yeah. It tried to bounce back the next day. It was just a selling opportunity. There was so much money sitting in there thinking they were going to get the big contract. When they did not get that, you had to sell. Even if you were selling in the hole, you kind of had to sell in hindsight. Capital's 2020. But, we went from $28 to $12 a day. We bounced 2 days later up to $18, $19.70. It got up there a couple of times. That was a selling opportunity in hindsight. It's tough. I mean, I'm not going long it. I said you got a little double bottom at 934, but there's so many bag holders in this. Is this just bouncing back to 13, 14? Very, very difficult. Unless we go into this market that starts buying everything again, it's very difficult for these stocks to come back when they've been hit this hard and they have this many bag holders.
All right, let's bring up. We're a few minutes late for our next guest, so I want to bring him on now. Matt Hammond.
Okay, I got to go, though.
IPO Warrior.
All right, I'll cover some more tickers in the chat here. I see Pabst Blue Ribbon is popping up again. So go ahead, Spencer, take it away.
A lot we didn't get to this morning. Matt Hammond from IPO Warriors. Matt, good morning. How we doing?
Good morning, guys. How you guys doing?
Doing okay. Busy show, busy morning, lots to discuss. Let's talk IPOs. What went down?
To bring on my my little Doge here. This is
hold on a second. Hold on. Yeah. Keep it up. Well, hold on a second. Let's go full screen on that baby.
Right, I got another one here. Kimmy, come here. Kimmy. Oh, and Doges come in actually 2 colors. A lot of people don't know this.
Oh my God! Smash the like
Kimmy and Aoki. Yeah. Hey, what's up, guys? You're live on Benzinga Pro.
We got real life Doge dogs.
All right, I'm putting them down there.
Doge dogs.
These dogs shed like crazy. If their fur was ever worth half a Dogecoin, I would be very, very rich man.
Oh, that's good. That's fantastic. That's fantastic.
That's Kimmy and Aoki.
All right. How are we doing on your radar on IPO land? How was the week for you?
You know, things are pretty sunny in IPO land. The rest of my portfolio looks like a dumpster fire, but I'm picking off some nice wins that keep me kind of out of a margins call with some of these IPO plays. So you got to be a little bit sparing, and we will go over, what my light's, I'm going to go a little bit darker here, guys, because my light's off, but I will be speaking and switching over to the slides anyway. IPOs are still, offering opportunities, maybe not as big a wins as we were seeing before, but still substantial wins on fairly easy plays. So we got a little bit of a late start here, so I'm just going to jump right in unless you have something else to add here.
Well, someone just asked what breed that was. That's a Shiba Inu, right?
That is correct. It's not a young Husky, and it's not a young Akita. Which is the Hachiko. It's a Shiba Inu, which is loosely translated or often referred to as the little samurai.
There we go.
And when you see my dogs play, it sometimes looks like they're engaged in battle. But great dogs, a little bit wild, but one of 6 ancient Japanese breeds of dogs.
So, wow. All right, let's get into it.
Cool. So let me jump up to the slideshow ticker here. All right. So we had some pretty big win opportunities last week, including Alfie, ALF, which we did showcase last week. ALF got off to a little bit of a slow start. I think there was some confusion, especially within Webull, over the ticker symbol. It kept switching from ALF to AFLIW. It was issued with warrants, and I bought the IPO, was offered through Webull. I picked up about 400 shares just in my Webull account. And the ticker was all screwed up. It showed actually kind of like went dark here at 109. It stopped printing updates and then all of a sudden showed the price update at market closing. And I think that confusion along with the closed market caused an unexpected drop in the share price on day one. I kind of recognized that, so I held on to it. There was a lot of chatter on Twitter about this and in Reddit. On day two, that started to kind of materialize. And I said, okay, well, as long as it keeps going up, I'm going to keep holding it. And then finally on day 3, we got the traction that we had expected off the debut, and it shot up to as high as $5.99. It's spiking again today. It's kind of caught that tailwind with RHE, LEDs. It's kind of in that vein right now. So day traders, keep an eye on this one. I've taken my profits on the shares, and I'm still holding about 400 warrants. So this one gave a nice win if you're willing to take the patience, read the social buzz, and hold through, the profit opportunity here. Again, low float is kind of the buzzword of the day these days. And while the rest of the stock markets, especially tech and some of the other momentum plays over the last year, have cooled off a bit, it seems like maybe, and a lot of money moved into Dogecoin over the weekend. I think that money will move back into swing trades and swing plays, and we'll be keeping an eye on these low float IPOs for the week ahead. The Honest Company, this is Jennifer Alba's stock. This one gave a very easy win opportunity. You took your entry on the debut at 21.22. You rode this initial spike. If you took 50% out here, you did a great move. Held the rest. Maybe this goes for a day 2 run. I think in normal market conditions, this might have taken that day 2 run. It looked like that off the open, but along with the rest of the market, it just kind of faded throughout the day 2. And, I always keep an eye on VWAP. If VWAP on these can't support that initial shelf, I've got my stop loss. I don't want to, especially if I'm in a position to take a win. Even if it goes back up from here, you just want to take your win. You don't want to be turning a win into a loss. You take your win, you look to the next trade, you say, okay, thank you for the money. And, you'd be happy with that. So we saw the same thing with Waterdrop, which was a Chinese IPO that was worth playing simply because it had Goldman Sachs backing. It's a legitimately robust company. You got a debut at 10.25. It did this steady rise that we see on strong IPO plays, gave you every opportunity in the world to set a stop loss, a trailing stop loss to take out half your position. You might let the rest ride, depending on your confidence level. Once it kind of breaks this shelf under VWAP here, you don't want to be turning a win into a loss. So you could get out partly, say at 11.50 up here, and take the rest out for a less substantial but still a non-loss win here, and then you're avoiding any downside, which you'd be sitting on kind of an uncomfortable position here because you don't see a lot of catalysts for these after they give up their initial pop. One that we did look at last week that was in that vein of Chinese IPOs that just didn't get any traction on social media, so I stayed out of it, was OG. This was the multi-level marketing e-commerce play, and it just bombed. 2 halts downward, no daylight in sight. And this is where you want to be checking out Reddit, you want to be checking out Twitter, you want to see what other retail investors are looking at, and if nobody's talking about it, it's a pretty good indication that you want to stay out. It was also a Friday. It was a really crowded IPO lineup that day. The ticker was getting confused with a cryptocurrency OG fan token, so there just wasn't any talk about this. And I decided, hey, I've had some wins this week. I don't want to get stuck in something that could be dangerous, and I just stayed out of this one. Okay, so this week we've got some interesting ones coming up. Nothing particularly, headlining, but some that have been rescheduled, which sometimes works in these low float stocks' favor because that rescheduling means they've had a week or two to get sort of marinated by the social media world, and people are talking about it. People are kind of aware of it. It doesn't take a lot to send these things through the roof. So one that we've talked about a month ago was Flora Growth Corporation, FLGC. This one was offered on Webull. It looks like it's sold out. It's only 3.3 million shares, and it's a marijuana growing company with no real revenue. It's unproven. And other than being a marijuana grower with low float, there's not a lot going for this one, except that when something sells out on Webull, and if I don't get a full allocation, that's a good sign that, hey, jump into this, take it out, take your position out, on the first halt, or at least a significant portion of it, and see if this thing doesn't just catch some headwinds. If it doesn't, you want to keep your stop losses tight. You don't want to be stuck in an underwater position here, but it's worth playing. Another one that we see is Transcode Therapeutics. I don't like to play biotech too often, but some of these low float biotechs, especially the ones that get a bit of traction on Twitter, traction in Reddit, they can fly. One halt has become common. One halt up. After that, you don't want to have your whole position still in that trade after the first halt. But this has been rescheduled for 2 weeks in a row now, and I've noticed that with each passing week, the number of people like asking me about this or posting about it and saying, "Hey, low float, RNAS." I don't think they even know what it does. They just know it's low float and it's an IPO. Okay, why not? Put some, maybe not a huge position, but take a shot at it. Some of these have gone ballistic, and it's really nice to be in those trades when they do go crazy. One that I do like, and I think is probably my lock of the week, is iPower. This is a hydroponic. We covered this last week, and it got rescheduled due to market conditions. Basically, they said the market's closed. We want to come live when it's a stronger market. They sell hydroponic equipment, so that's kind of the thing behind the thing, as you guys talk about in terms of weed growing. It's got the at-home catalyst. It's got the DIY or DIY, do it yourself. And people are buying hydro equipment to grow weed at home. And whether it's legal or not in a state, people can kind of get away with growing it in their home, especially now. Electric companies can't just say, oh, well, you have high power usage. That means it's weed. You're growing weed. You could be mining crypto. You could just be staying at home. There's a lot of reasons why the hydro equipment has been a very profitable business over the last year. So this company is profitable, and their revenue, gross profits, and gross margins are all growing at a healthy pace. So you're going to have, it's not just a growth company. It's not just in the future, this will be something. This is something that looks pretty solid. And the only kind of red flag is Roth Capital IPOs have gotten kind of a bad name in the past. But some of them I've done some research, and it looks like they were involved with a bit of just pumping and dumping their own IPOs in the past. But that seems to they've had some others that have done well since then. So it's something that I'm just sort of aware of when I check the temperature on social media, but I'm seeing less and less negative. There used to be people saying, I'll never touch Roth Capital. And now people are kind of like, okay, low float, wheat stock. Oh yeah, Roth Capital. Well, I'm in. And I think this one has gotten a lot of interest. A lot of the kind of IPO traders are playing this one. And that should, for me, this is one that I definitely want to be playing. Again, protect your downside. Low float can shoot this thing up if the traffic and demand shows up. If it doesn't show up, things can get kind of, you don't want to see barcoding. You don't want to see very spotty charts. So if volume starts to fade, then, it's not a great position to be stuck in. But I like this one. I'll be playing it. And, just if you get halts, start shedding your position. Don't be a hero. Don't say, don't expect every low float hype stock to do what UTME did or what eBet did. Don't be greedy. Take your money. Be happy with your profits. Stay away from I wish I had. It's better to say, I wish I'd held for more profit than to say, I wish I'd sold for a profit when you're sitting in a losing position.
Yeah.
Okay. Now we're going to get to some that are less low floaty and more, I'd say, traditional companies, not traditional so much as
real businesses. Thank you.
Yeah, finally real businesses.
Jeez.
Okay, SimilarWeb. If you guys have been watching YouTube videos and you do anything on the internet, you've probably gotten some SimilarWeb YouTube ads served to you. Yep. This company does software as a service, website analytics and comparison tools. It's got steady growth, but it's unprofitable, which you see a lot in growth companies, which are currently a bit out of favor compared to the way they were a year ago. You are getting some comparisons to SEMrush, SEMR, which debuted on March 25th. Didn't do great on its IPO, but it's up 100% since then. So you might have people saying, "Oh, well, this is a better, website analytics and SEO comparative tools. These are actually pretty good business models." And it doesn't have a huge float. 8 million shares is considerably smaller than big company IPOs. So this one's interesting because it is something that people have become more familiar with over the last few months as their advertising has kind of targeted people. I get these served to me all the time. So I'm interested in playing this one, maybe not with a huge position, but it seems like one that if you even get stuck holding a little bit of a bag like SEMrush, you could get out of this one fairly easily, especially if the debut price isn't priced at a premium above the IPO price. So I'll be paying attention to this one. Global E, this was kind of put on my radar by E-Trade. They've got this offered to the public, which often means that if I don't get any allocation, it's probably going to be there's substantial demand for this. If I do get allocation or a full allocation, that might be a red flag in time, don't buy extra. It's an international cross-border e-commerce payment platform. So they kind of do e-commerce websites that allow vendors to sell, across borders globally. They support like 120 countries or something crazy. They've got rapid growth and are profitable. That being said, I built a lot of Shopify and BigCommerce platforms for my clients. I'm a web developer by, my day job. And I've never heard of this one, which sort of puts it, makes me scratch my head a little bit. I made a lot of money on the BigCommerce IPO because I knew that BigCommerce was going to get Shopify comparisons, and it did really well. I'm not sure you're going to get that same level of brand name recognition with this one. The float isn't huge. We're not talking 30, 40 million shares. And, for a profitable growth e-commerce company, maybe this does well. But e-commerce platform, IPOs on their own haven't been, Honest Company was sort of underwhelming. It did offer a win opportunity, but it didn't just skyrocket. Copang was a complete dumpster fire, and that was because of the lockup, but it still hasn't recovered. So tread carefully on this one, but maybe keep your hand in the game and just, take a half position or a smaller position. If you want to take a small win, that's great. I don't see a huge downside unless this debuts at a huge premium. Again, this one is maybe a little bit subject to what the market conditions are this week. I don't see see it as an obvious day trade magnet for the the low IPO float people, but an interesting company and one to keep an eye on. Okay, Enact Holdings. This is Genworth Financial's mortgage insurance spinoff. Genworth Financial is a huge financial company. They were trying to sell this division of their company off to a Chinese financial company, China Oceanside. And after sort of a messy 4-year acquisition deal that fell apart, they've kind of turned to the IPO as the backup plan. So it's sort of a plan B IPO. It's also the mortgage industry was, I guess, had a lot more interest and hype earlier in the year or last year, and now is sort of cooling off. You see Rocket Mortgage is at its all-time low right now, and this has Blackstone backing. They're pretty good with money, but otherwise this is sort of just not particularly sexy, not particularly interesting, and I don't see myself taking a big position on this one. Maybe play it because the downside doesn't seem like it'll be debuting at a premium. Maybe you pick off a point or two, but I'm not particularly excited about this one. And the last two, Zenvia. This is a Brazilian customer engagement platform. They allow companies to automate, correspondence and create user engagement experiences with SMS, social media, tweets, Facebook messages, that kind of thing. Sort of like a HubSpot for the Brazilian market. We've seen a bunch of IPOs for Brazilian or Asian companies that I don't think retail demand in America understands these companies well enough. We don't understand whether this is a well-recognized brand or not in Brazil. And like Copang, even some of the other big names from years ago took a little while to get some steam. They have to prove themselves first. So I think these are sort of a wait and see. I'm not really too interested in them, and it's a Friday. Friday IPOs are always a little bit tricky, and depending on the market conditions, this just might be completely ignored. I'll watch it to see what it does, but I don't see myself taking a play on this one. There is one on Friday, here.com. This one looks interesting enough to me. I think it's a little bit less disruptive than something like Smile Direct. They basically are an e-commerce platform for selling, hearing care products. They did well during lockdown. They have a strong social marketing presence. They're really like a marketing company. They're not profitable, but they have shown impressive growth. The float's about 16.2 million shares. I think it could be an interesting IPO. But again, if the market's just terrible this week, I might just pass on it if I've already taken some wins on Flora Growth or iPower. We'll see. I don't see it. It has a great domain name here.com, but it's not. I don't want to get stuck in this position with some of the, we've got Foursquare and we've got Vimeo is, being spun off from IGC next week or on the 25th. So I don't want to be stuck in positions that I'm hoping come back up into profitable when I have on the, I think Vimeo will be a very strong one, and I want to have my cash free for those. So I'm always aware of what's not just on the table right away, but what's coming up, because it really sucks when you have something hot coming up and you're like, man, should I sell this one that I'm, underwater with or taking heat on to get into something that, I don't want to miss that one, but I also don't want to sell this one while it's down. Sometimes it's better to say, look, you're not going to nail them all. Sometimes you take a pitch just to see, what the pitcher's throwing, and that's how I'll be, assessing this one. If the social media is talking about, if people are hyped about it, if I see something, a lot can happen between now and Friday. But this is kind of okay, it's a definite maybe. So,
all right. Was that it for the week? I mean, how many more IPOs could there? Yeah, I figured that. Okay.
That's what we got.
I was like, how many more could there be for the week? All right. Matt Hammond, guys, if you want to know more, he runs IPOwarriors.com. I'll put the link
up. Sign up for the newsletter, guys. I send out the newsletter every Sunday night. It gives a little bit of strategy on, how I played the week before. It gives you guys some ideas about how to play each one of these, whether I'm playing them. Gives you a little bit of a preview. You read that newsletter, you kind of, you got your background information, then watch the show. You guys can ask questions. We can ask, answer some of those, and expect a pretty heavy IPO lineup coming down the alleyway, because the SEC has got a lot of companies. This is a great way to make money when the market's down, when all your other trades are falling through and there's no, swing trading. Buying the dips has become a little bit of a burnout. These opportunities are, maybe not huge wins, but they're pretty safe. I showed you the plays I made last week. They were pretty safe. You get in, set your stop loss as the stock goes up a little bit. You raise your stop loss. Maybe you're not going to turn everything into a 20 or 50% win, but you stack up those 10% wins, 10% wins in a row. That's doubling your money.
All right, Matt, thanks a lot. We'll talk to you next week.
Thanks, Spencer.
All right.
Have a good week.
We are inside a minute until the open. I want to bring up my screen so I can show you what I have been looking at the entire time here. This is what I use in the mornings. This is Benzinga Pro. I've got my up filter on the top left, my down filter on the bottom left, a news feed, and some charts. There's a lot we didn't get to today, guys. I'm sorry. I'm going to try to cover a few things at the open. No David Green today. He'll be back with us tomorrow. Still trying to nail down a consistent weekly schedule with him, but he's a busy man. He's got a lot going on. So Mitch and I are going to hang to the open, but there's a few things I wanted to get to. We didn't even really – first off, let's just go back to the trade desk here for a minute here. We are down at the low of the there's our opening bell, at the low of the pre-market session, 565. Looks like we just opened at there. Let me pull up a one-day chart so you can see. That's what we opened at, 565, after getting above 700 this morning on that. You can see that green candle right there. That was on the news of the stock split, then the earnings report, then you saw that. Okay, what else do we not get to today? Actually, you know what? Now that we're open, let's hop on over to my movers tool that I call Movers 2. This is our scanner tool that is in beta on Benzinga Pro, and I have it sorted by change from the open. That's what I'm interested in, change from the open. Let's see what's moving, and let's just keep this on the screen and watch what's moving and see if we can find out why here. So what do we got here? I got my what's up on the left, what's down on the right. Redfin leaked a little bit at the open there. Good morning, Mitch.
Starting the morning right out the gates, long MRO, long oil to start it off.
Oil is I had it up on my screen for a good part of the morning. Oil is up this morning, obviously across the board on the hack over the weekend. So whether you're looking at MRO, you're looking at all of them, really everything. Every oil stock seems like is up this morning. You can go to the XLE, all up this morning on that headline. So, okay, what else am I seeing? I'm going to start with the what's up and move over to see what's down eventually. And I do have some filters on, I should say. I filter out super small stocks, super small companies. So this isn't the full universe. This is just what I look at during the day, right? So does anything jump out to me? Oh, we didn't cover what is it? Party City? What is it? What's the ticker there?
PRTY.
Thank you, PRTY, because they had earnings.
Yeah, it's on my list.
Yeah, they had earnings, and they were among the biggest. Wait, where's the headline? There you go. Yeah, they were among the biggest gainers this morning. PRTY. If I pull up a chart there, you can see it.
Yep.
Looks like giving back those gains though at the open. Where's my giving back a good chunk of gains here at the open. But they beat on their EPS and they beat on their sales, and they gave some strong Q2 sales numbers. Brick and mortar retail back in favor here. What a time to be alive, I guess. What else are you guys seeing out there? I'm seeing I'm seeing AMCX, names that jump out to me. I'm seeing Coty. They had earnings this morning. COTY. On the downside, I'm seeing Tilray. Ooh.
Technology's on the downside. Leading is energy and basic materials. Right behind it, industrials. Definitely keep your eyes on some industrials. Not
a surprise to see those two in the green again. Just as much as the oil stocks are going to trade up on that news from over the weekend from the pipeline. Iron ore, I don't know if you guys saw this. Iron ore futures went limit up in China overnight. Limit up, the 10% rule, right? So we talked about this briefly on the show, but metals, right? Steel, materials, all of it, industrials, all of it going up here again.
Rush ripping. That's a leverage in oil, but looking good.
Oh, there was a question that somebody wanted me to ask Matt, and I forgot. I apologize. Whoever asked about what was it? ATAI, a tie. They asked when they were going public, and I was going to mention it, and I forgot. If you go to this page, benzinga.com/calendars/IPOs, we've got a free IPO calendar. So I don't think the date. Whoever asked me, I apologize. I don't think the date for a tie. This is a psychedelics play. I don't think it's out yet, but this page again, benzinga.com/calendars/IPOs, IPOS is a free IPO calendar. You can see upcoming dates. So I want to put that on your radar. Okay, back to the market. Yeah,
Airlines moving up, guys.
Airlines. Yeah, spike. Let's pull some charts here. Pull some charts. Actually, you know
I'll
what?
call the sector, you call the stocks.
Let's pull some charts in the same screen if we can. Where's my details? Let's do it this way.
Shipping ports also up. Shipping imports.
Oh man, look at Apple this morning. Yeah, you called it, Mitch. You called it.
Yeah, tech getting hit. Well, one of the things is, you guys, I'm not looking at specific stocks. I'm just looking at the sectors and trying to get you guys onto the sectors that at least are being traded and can give us a chance to find a stock that's going up.
Oh, what's going on with MP Materials? Was there news this morning on that? There may be. Why would MP
be taking a little bit of a hit there?
Why would MP be down?
Did they price their offering or something? Oh, that was already done, but it was another one that priced their offering. MP, I mean, take a look at lit. See if the sector's down.
Maybe.
Lit. Lit's not lit.
I mean, MP is tech, I guess, is growth, right? Here, let's look at our bogey. It's a growth. Look at ARKK. Oh my God, this thing every day with this guy. Every day, it literally. Dennis is right. It's death by 1,000 cuts. It really is. Every freaking day.
I said it. You know, Kathy's either gonna be a hero or a zero. We'll find out what she is.
All right. Chris Cashy just shot me a tweet about MP. That I guess clarifying that there was never a lockup. Oh, that's good to know. That there was never a lockup on the stock, but that's not. I don't think that's relevant to today. I think this is just trading off with growth. But
all right, guys, gonna sell into this rip here into MRO. Nice trade here, right out the gates.
Oh my goodness.
Let's see if this can get above 1230s.
So yeah, there was that cannabis deal, right? TCNNF, which I am long, Trulieve making a deal. They're buying Harvest Health. Pretty large deal as far as cannabis goes. What, $2 billion? So I would expect more of this, right? You've got this market now that's like still very, very immature. You've got like a half a dozen. You got like probably like 5 or 6 like key players in the U.S. Like right as far as size and as far as multi-state footprint. And you're probably going to want to see between those half a dozen, it's going to be like a race to the top. And the fastest way to grow is to buy it. So I would imagine that you get some of these like sort of mid-tier U.S. companies like Harvest Health, which just got bought today by Trulieve. I would imagine you see more deals in that space. So keep an eye on that.
I mean, little amount of share size, but already made a little gain there on MRO. Looking for it to pull back. Let's see if oil wants to keep going. It did do a quick push. I expected that right out the open. Let's see if it pulls back and gives us another drive.
Someone just asked what's happening to TTD. TP saying rewind the stream about 50 minutes, and you'll see all about the TTD thing. They had a stock split and they announced earnings and they were not good. By the way, didn't even ask the chat what y'all thought of SNL. But let's do this. One in chat if you thought If Elon exceeded your expectations, 2, if he was worse than you thought it would be, and 3, if you just didn't watch and don't care. Let's do that. 1, if Elon was funnier than you thought, better than you thought. 2, if he was worse than you thought. 3, if you don't care and you wish we would stop talking about this. Let's just do an informal survey.
One thing you realize, Elon, don't look into acting.
I'm going to put 1 on here. 1 for me. 1 for me. My expectations were pretty low, and so from that sense, they're pretty easy to beat. But I'm seeing some 1s and some 3s. A lot of 3s. People don't care. All right, come on, guys. It's fun. We're having some fun here. All right, what else am I seeing?
Trades here. Let's get this
PUBM, Pubmatic.
My PubM.
Did they have earnings or no? They're down with Trade Desk.
No, it's coming in this week, Thursday.
They're down with Trade Desk. That's what that is.
Exactly what that is.
Oh man, yeah, they report later in the week. I think they're going to be on Money Mitch. Is that right?
Yep.
All right, that's exciting.
Tell you which one I actually have, guys, that I'm keeping an eye on. I took a swing trade on CCIV on Friday. Keeping it right now. I have 906 entry. It's gotten up to 955s. In the morning at 4 a.m., I did get a spike that I should have sold into, but I didn't get it fill. It went up to 1994. I wanted to fill at 90s, but looks like I didn't get the fill. I put the order out. That's why you got to put some orders out in the morning. Sometimes you will get those early morning fills.
Always a good lesson there. Early morning. Hey, you got to be careful though in the pre-market.
I mean, there's nothing wrong with putting a limit order that you don't expect to get filled, but if it does, hey, you'll take the profit.
True, that's true. Oh, see, this is what I want to see. IPOE. Okay, see, I like that because I've mentioned several times now that I'm eyeing this one like a hawk. They announced a date on the vote for the merger with SoFi. Okay, so this is the kind of headline that we saw in the fall and maybe January. SPACs would pop on this, and this one did. It was up again this morning. All on the announcement of a date, not even a merger or anything, just a date of the vote. So it's down off it opened at the high for the moment. I want to see that only because I'm looking to buy this thing, and as soon as SoFi can gets that bank charter. So the fact that it's up $2 in a day annoys the crap out of me. So I like to see it come in just from a personal standpoint so I can get it on the cheap. But waiting for that bank charter. Haven't heard news of that yet. As soon as SoFi gets that bank charter, I'm in. Because if they don't, then that just handcuffs them. And I know it's probably a formality, but I still want to see it.
Pull back in oil there, guys. Be careful. Don't get caught.
Okay.
FCX was on my watch because of copper. Let's see how it's doing today.
Wait, what is everyone talking about in the chat about
this? What's up?
What is this Pat Mobile? I don't know what that is. I have no idea what that is.
One thing that I want to put out there, guys, and I'm going to start doing this consistently, guys. If you stick with Benzinga clips, I'm going to be starting to put out exclusive videos in the morning.
Hey,
so check it out. One of the things I did this morning is I went through these sectors and looked at certain stocks that possibly could move. Of course, MRO, FCX on that list. Guess what? Take a look at it today. You guys tell me if you guys want to be watching this in the morning, but it's only and only on Benzinga Clips. So if you want to do that, definitely follow Benzinga Clips.
Yeah, subscribe to Benzinga on YouTube. It's our main channel, and Benzinga Clips is our highlights channel where we just, as the name says, we just post clips of the shows on that channel. And we really go out of our way not to spam it. Like, we're pretty selective because, you know, your time is valuable. We're not trying to put up 1,000 clips a day. So we really try to put like the best highlights, the best moments on that channel. So check it out. Okay, 943. Let's pull up the SPY. Why do I have this one up? Let's pull up the SPY here. Just to get a nice view of the overall market. So we're, you know, flat to down. I mean, we're down a little more in the Qs as we've noted here this morning. As is the case, tech is down, value is up. Look at the diamonds. Same story, different day. Really, same story, different day.
Yeah, a little bit of a crackdown today. I was expecting a little bit more of a rip out, and we got a lot of big stocks in the red. If you guys see over my head, right over my head, that red right there, that's not a good sign here.
Oh, that's not good. Yep.
That's not a good sign. Those are the big boys. The big boys are on this area right here. So I'm keeping an eye on that. So you guys look over my shoulder. If you see that turn green near that 10 o'clock, then we'll start looking to take some trades here. But really, I've been seeing a little bit of a pullback here. Only thing I see out there right now is some shorts available to me. And no one wants to see me short, right? I mean, let me know in the chat, guys, if you guys want to see a short action. But I don't think anybody likes shorts.
Someone's asking what's up with Golden Nugget. Well, what's up with the whole sector, man?
Well, I mean, Golden Nugget has a lot of plays with connections. Also, well, I mean, you could call out DKNG Penn still on the pullback, right?
Yeah.
Until those kind of change the story, you're going to see a pullback in this area. But I like RSI, to tell you the truth, guys. I mean, if you're going to look at anyone in this area, maybe check out RSI. But GNOG is going to keep pulling back until you see DKNG or the leaders, the industry leaders, Penn and DKNG, start getting that story back.
All right. What up?
Looks like someone loves shorts out there. Just not many.
Smash the like if you want to watch Mitch Short live on the show. That'd be fun.
I'll do it.
What else jumps out to me? How's China doing this morning? Go look at Baba. Ooh, no. JD. Ooh, no. Baidu. No. God damn.
All right, guys. I'm gonna look to see if I can get what's called a VWAP rejection short here. What is a VWAP rejection short? So a VWAP rejection short here, guys, is going to be whenever you get a stock to try to rip out, right? So this is Playboy right here. I got the wrong chart up. Hold on. Wrong screen, man.
Before you
did it right.
Go
ahead.
No, just go into it. I was going to bring up an earnings calendar, but just go into it.
All right, so really quickly, Playboy did a spike up right to 5150s. Really quickly rejected off the resistance. Multiple touches up there, multiple rejections give us a little bit at least ability to measure the risk here. So now we're going to see this hard action going down. I want it to come back towards VWAP around this 50-50, and we can risk up here by this 50-75, and we can look for it to come right back down. But as you can see, it did bounce here and come right back up to the VWAP. It might have already done the move to fake out short there. That's Playboy. Playboy looking like a short today.
Oh, Playboy's come off those highs super hard.
Now you know why I'm looking at it, Spencer.
It kept on going long after every other SPAC had stopped, and only topped out last week. But
yeah, it doesn't mean that I don't like the stock, but sometimes you know when a stock has just gone too far, and especially for a day trade, doesn't mean that it's going to continue going down, but you can also see it kind of pulling back here. So MRO, big pullback to 12. Let's see if we get a push right back up to VWAP. I had this feeling that you were going to get this fake out look. That's why I took profits on that first push up there. Guys, I was able to take $24, not much off of 100 shares, but I mean, with 100 shares of $12 stock, you're not risking that much either. So not too bad of a first trade. Let's see if we can get one more trade in today. Let me know if you guys see anything rocketing. Right now, I'm seeing Soli come on back down. That was one of the biggest gainers of the day. It's on the sideways action right now. What's up with this stock? Spencer, do you know?
Soli?
Yeah, Soli. Soli's one of the biggest leaders of the day.
Yeah, they're getting bought, man.
Oh, buyout? All right, so that's not going to move much.
No.
All right, PRTY. Let's take a look at the party.
Off your screen, you're done.
Uh-oh, party. All right, so with party, I could see clearly it did a fake out in the morning. Little fake out in the morning. Let's see if we can get this move to come back up here. So you see how this kind of downtrend action here, and then it pops right back up. That's called the red to green move. Why? Because it goes off the support, guys. And so if you can clearly kind of see this support action here, it went up, came back down, built some support there, and now it's pushing back up. Let's see if it can pull back to VWAP around 855s, 860, and then we might be able to take a long into this one. Let's take a look at other retail sectors, see if this is what we're seeing right now. So department stores doesn't look too bad right now. Let's take a look at Macy's. Macy's is a chart that I've been seeing trending on the upside. Let's see. Looks like we had 3 resistance tests here. If you look at the hourly on the bottom chart, 3 resistance tests here at 17.99. Let's see if we can get back up through there with some strength. KSS, let's maybe take a look at. There you go. That one's starting to lead. That one looks like a leader in the industry. Let's see if we get a little pullback here towards 62.25 and we can take a trade here.
Okay, real fast before I forget.
Let's do it. What's up?
I wanted to bring. Someone asked me if I was going to bring up the earnings calendar for the weekend, so here it is.
Do it. Let's do it. Let's bring it up.
So we're obviously past the real meat of earnings season, but we're still well within it. There are a number of big names reporting this week and still to come. So just to put some numbers to this week, several hundred, right? We're talking about there's 145 earnings reports after the close today, 107 after the close Tuesday. Over 100 basically every afternoon except for Friday. So we're still got some big ones here. Tonight, you can see there on the screen, Roblox, Virgin Galactic is a big one. Vuzix, which we've talked about. Win, that's all tonight. Tomorrow morning, Jumia, or Jumaya, I don't know how you pronounce that, and Palantir. All right, so Tuesday afternoon, EA, Unity, Fubo, Vizio, QuantumScape. We got later in the week Playboy, Bumble, Sonos, Wish, a lot of growth tech, a lot of smaller growth tech. Okay, Thursday is going to be their big day. Thursday morning, right? Alibaba. All right. Thursday afternoon, Disney. Coinbase is Thursday. First report as a public company. So some stuff later in the week. There's your earnings calendar for this week. Again, all this is available on Benzinga Pro, pro.benzinga.com. I believe we have. Hold on a second.
LL doing pretty good there, man. One of our story stocks that we were going to take a look at.
LL, God, lumber. Can't stop, won't stop.
Yeah, I think Home Depot's starting to pull back. It has done a massive rip out. Can Home Depot get to 350? That's what that was the look that I was looking at in early May. I mean, it's already gotten up there to 340s, looking like it's trying to get to 350. Lowell's is pulling back a little bit. That's what's my concern if we're going to see a crackdown. But definitely those 2 stocks, man, what a rip into inflation. Now I learned. Inflation stock, look at Home Depot. I didn't know that was such a good inflation stock.
Yeah, I mean, these things don't go here. We have to check. We have to check UPS every day.
All right, so in the red today, I just want to put out really quickly. Technology is almost down 2%. Leading us leading us is basic materials, and then energy right behind it. But definitely today, consumer cyclical down, technology down.
What else you all seeing out there? So I think my plan is Mitch and I will hang out until about 10.
10 is a perfect time.
At 10, I want to transition this into our latest vlog. We're going to premiere the Benzinga vlog episode 3 that Rohan spent all weekend supposedly working on, and it does involve a prank of Jason. So that'll be at 10 o'clock. We're gonna then this stream will redirect straight to that. So that'll be there. Okay. What else are you all seeing? X, yeah, X going to give it to you every day with this one. Every day with U.S. Steel. Every day with steel in general. They don't stop going up. Interesting that a lot of pot is down. Like Village Farms, right? VFF and Tilray. Very interesting.
All right, guys, about to get short some here of RCL if it rejects one more time to get above this 84. Trying to do a short for everybody. Someone wanted to see it.
Someone did want to see it. That's true.
All right, right there, guys. Just got short there.
This is Royal Caribbean?
Yeah.
I can't wait to go on a cruise. So excited.
Just for me, Spencer, just so make it sure everyone understands what kind of trade this is, can you put the disclaimer on there?
Oh, man. I forgot about that. Where's my disclaimer?
Just want to make sure there. All right, guys. So we're going to be looking for this to come right back down closer towards the 83.36 level. That'll be first profit. And then we'll look for it to come and try the 83 down. Right now, we're short at exactly 83.96. We're looking to hold towards a risk of 84.15. So we're pretty much holding about 20-cent risk. We're looking for a 40-cent profit on the way down. And then we'll look to take some more as it keeps going. If we get it.
That's an interesting call, and it's really so you're shorting into this.
Yes.
Yeah. Okay.
So what you're doing is you're it's called a kind of a VWAP rejection here, where it slightly comes above VWAP. It looks like it wants to come back up to rip, but then it rejects the levels that it already kind of tried to test out of. So that right now it really is the 84. If it gets above 84, it really wouldn't look nice. It would start looking like on the bullish trend. But if it cracks down below VWAP right now, it's actually going to get heavy on the downside push. And then if shorters come in, let's say somewhere near this 83.60s or 83.50s, it could really start cracking down towards that 83.
It's interesting that you bring up RCL, because if you look at Carnival today, is down 1.5%. You look at Norwegian, it's down 0.8%. You look at RCL, it's only down 0.5% relative to those two. So
there's a reason why I'm picking that one out of all of them. But you see how they're all kind of in the same trend, right?
Well,
so all hanging around the VWAP, NCLH, CCL is the only one that's kind of more down to support. So you see this one quickly rejected the VWAP. And these are the VWAP shorts kind of that I really like, guys, because you see the VWAP line gets respected here almost 3 times. Now, if it comes up to test the 4th time, that's when you got to be careful, especially around here, around this 10 o'clock time. Sometimes we'll get a change in the SPY overall. Let's see the SPY right now. See how the overall market's looking.
I went down a little bit. But.
Exactly. So, but one of the things that I want to point out is look how this support is clearly drawn right now. So you guys see this clearly drawn support, right? This is kind of like the day trading time.
Support or resistance? What?
This is support down below. It's 42.75. I'm sorry. Yeah, right here. So multiple times we're trying to crack that, right? So now this is a lot of times when I use an hourly chart on the SPY, because this is how you could really see it. Okay, so man, all right. So we actually got a little bit lower support there and a higher resistance that it's kind of trending in this sideways trend, right? And so we want to see it break out of this trend or break up or down, whichever way. If it breaks down, it'll be looking good for our shorts. If it breaks up and out, we'll start looking for maybe some longs. But that's what I use the overall market for a lot of the times, guys.
Guys, you want to find a stock that is not that's going against the trend this morning? Peloton. I got Peloton here. It's actually up today. Peloton is in the green. We have a Peloton in the green morning, everyone. And you look at the rest of growth, all of it down. All the Cathy stocks down. Not Peloton. Very interesting. Very, very interesting.
All right, guys. Let's see if we can get this breakdown through the VWAP here. It's starting to test the VWAP on RCL. Let's see if we can get this breakdown. Come on down, and then we'll look to take some profit here. Remember, guys, I'm using very little share here. And the main thing about when you use a little bit amount of shares is that you can really start judging your risk and return. And if you're not holding towards those levels, then this is when you really got to understand, like, hey, so what kind of trader am I? Am I a planned trader? Am I taking that planned attack? And I think that's what matters a lot of the times. If you're going to get a little subjective, you have to just be really, really good at being subjective. And that's the hard part about being subjective. That's why I like being more of an objective trader, where I have my risk, my return, my out plan, and understand the trade so that I can stay in it versus try to get emotional in the trade and judge it based on a subjective basis.
All right, Mitch and I are going to hang out for another 2 minutes, and then we'll hop off, and then we'll go into our programming for the day. So I mentioned the vlog that's going to premiere at 10. After that, we're going to have, if I can bring up the schedule for the day for a second, SPACs Attack at 11, Power Hour at noon, Get Technical at 1. Actually, the schedule does not include, and this is my fault, a new show. We got a new crypto show debuting today, 2 o'clock, Moon or Bust. They're not going to talk Bitcoin. They're not going to talk Ethereum. They're going to talk the other 98% of the crypto market. the stuff that doesn't get as much love. So Moon or Bust will be at 2:00 today, right here on Benzinga's YouTube. The At the Close show will be on with Edwin Dorsey at 4. Monty Mitch making bread with Cheds, and Ruel report wrapping it up for the day. Programming note as well. The next Benzinga Small Cap Conference is this week. It's a 2-day conference. It's Thursday and Friday. So we're going to do what we usually do for those conferences. We're going to preempt our usual programming for that. I want to wrap up this stream with a quick trailer, but I don't want to cut Mitch off. So, Mitch, how you doing on your setup there? Or on your
I'm just watching it here. Let's see our RCL here. The one that I'm really liking again is MRO. MRO is looking good again on the long side. We needed to reject right here. It came down towards VWAP and then push back up. If it pushes back up, we look like we could get the classic trend reversal of a red day starting and then a green day starting to get into that green day. Let's see if we get a rejection here or it just comes back down.
All right, go ahead and smash the like, guys. We're almost at 500 for the day, and I need to get to 500 because that's how I derive my value. 500
like, guys, come on, support us.
Let's get to it. And then, so last thing, this is what I'm going to do. I'm going to play a trailer for the Small Cap Conference, and I'm going to end the stream. So, Mitch, any final thoughts?
Final thoughts, guys. Definitely check out SPAX Attack today, guys. We're going to be having some fun. We're going to be opening some NFTs from Muds. So if you guys like some NFTs, definitely come and hang out. Who knows? Maybe we get a super rare, an epic exclusive. Definitely come and hang out. Last time we did it, it was a lot of fun. It's like a kid in a candy store when you're opening the packs. You'll be just like us, probably celebrating whether we get the rares or we get the uncommons. Let's definitely pay attention, guys. Come through. We're going to talk about some different SPACs also. So come hang out with us. SPAX Attack. That'll be at 11. And, of course, tonight on Money Mitch, like always, I'll be talking the top stories in the market. And if you want to go ahead and stick with the trends, I definitely suggest checking out Money Mitch as we've gone through a lot of these trends that you're seeing right now in the market.
All right, new plan. Not enough time to end the commercial later in the day. Everyone have a good rest of your day. See you on the stream for SPAX Attack. Mitch.